Hello. Welcome back to Alpha Beta Soup, where we unpack Bitcoin using on-chain analysis. I'm TXMC. Well, we're back. Time to see what the market's been doing this week. I think it's holding up pretty well, and we'll go through a variety of charts to back up that claim. I've got a lot of different things to show you. We'll bounce around, but the long and short of it is the market seems very resilient to the liquidation event that we experienced last weekend. There's not a lot of volatility following up that event, which is very good to see. We'll look at the Bitcoin price chart, we'll look at futures open interest, and then we'll check out on-chain spending behavior and make sure that it still fits within our expectations. If you enjoy this content, make sure to give my video a thumbs up and subscribe to the channel. If you enable the bell icon, you'll get a notification every time I post a new video. We just hit 5,000 subscribers, which is absolutely insane. You guys are amazing. I never thought that I would have 5,000 subscribers to this channel when I first made my videos in September, and it's just unbelievable. Thank you so much for the support. We're just getting started here, and I'm still figuring out as we go along. I'm glad you're with me. But we're not here to talk about me, we're here to talk about Bitcoin. So let's get into the charts and talk about it. Let's start out by getting our bearings here on the price chart. So we've got our liquidation wick here that went down to 42 something thousand. And in the last few days, price is sideways here between 48 and 50,000. In the last video, I expressed that I believe price will continue to range sideways through the month of December. And in a moment, I'll show you a little more about what informs that belief. But just for now, know that my expectation for the month of December is that we continue to kind of hang out in this range here. I don't think we'll threaten new all-time highs. I don't think we'll get down here into the low 30s necessarily. I really feel that we're bound to just kind of stay in this area here for the month of December. Low 50s, down into the 40s again. Maybe we test the bottom of this liquidation candle. I don't know necessarily that we go below it, but really nothing in this range here would surprise me too much over the next few days. If I slap on a fib here, I just want to show you something. I want to show you where we are in the range. So this is showing the top and the bottom of the range here since the spring, and this yellow line is the midpoint. And you can see that that's right where we caught support after the liquidation. So we're still kind of obeying range support from this year. And right now, this is kind of an area that we'd like to see maintain a bit of respect as we go sideways through the rest of the month. I wouldn't want to see price dancing around down here in the low 40s for too much time. Also worth mentioning here, if I turn on a couple of these moving averages, price is right between the 100 and 200 day moving averages, which currently sits right around 46,000. So that's playing a bit of a role in the resistance we're seeing here also. I bought a bit during this liquidation down here, and if we got more tests down below 47, 48, I would try to deploy a bit more. But that's my bias. I'm not giving financial advice. I am a long-term accumulator. So whenever I see big dips in price like this, that for me is an opportunity to add to my stack. So I promised that I would explain a bit about why I think sideways ranging is likely. So let's get into that. Here is another look at the price chart from coinalyze.net. And the reason I wanted to show this is because I wanted to look at this chart below the price chart here, which is showing aggregated open interest. So if you recall, open interest in the futures market is the sum total of all of the contracts across all positions. High futures interest means that there are traders with an excess amount of leverage or also just a lot of positions open. Either way, it signifies increased activity and interest, for lack of a better word. Down at the bottom, we've got open interest, and at the top, we've got the price. So if you look at these moments here, you see these big red wick candles? These are our major liquidations from 2021. These are moments where in a single day, large amounts of open interest were wiped out due to liquidations, just like we experienced the other day. And the reason I pull this up is because I want you to look at the price action after each of these liquidations. Okay, so this one is right here. Look at the price action after that moment. Here's another one here, another one here. Here's the most recent one. So the pattern that I am seeing here is that after a full liquidation in futures, price tends to move sideways and test the range lows. You see this here? We had the wick down, a little bit of sideways action for like 2 or 3 days, and then it tests the range low, more horizontal action. Now we did get another negative move down here, and I don't think that we see this and I'll automatically assume, oh shit, we're going to get another sideways and down, because there were other factors here to consider. A, huge leverage in the system, but also this was a moment right in here was when Elon Musk announced that Tesla would no longer accept Bitcoin as payment for vehicles, after saying they would just a few months earlier and catalyzing some of this retail rally. So right around in here was when they announced that that would no longer happen. And then just a week later, we got a big liquidation again. It shoved us down into the 30s. But again, look at this. Big liquidation wick here to start the event, and then sideways price action for well over 2 months. Testing the range low, testing it again, finding support, moving on. Over here in September, this candle is El Salvador's Bitcoin Day. We've spoken about this day quite a few times on the channel. It's the day they made Bitcoin legal tender. There were a lot of traders who were rallying into the news, and it was a bit priced in already. And we got some bears that stepped in and helped to kind of fade the news and create this liquidation event. But again, look at it. So seeing this history here in 2021 of these 3 events playing out very similarly makes me feel like we're in for a little couple of these bounces, and then maybe eventually we move out. But it could be January before that happens. We're in a risk-off time for the market right now. At least that's the way it feels to me. Got a lot of people sitting on fat PnLs from this year, and it would be foolish on December 9th to go and sacrifice your potential yearly bonus by taking risk on at the end of the year. I just don't see that as very likely for a lot of big money, and that's why I think we have a couple of weeks of this action ahead of us. Keep this chart in the back of your mind when you think about what should happen after a liquidation. It's most likely that we go horizontal and we test the liquidation low. Here's a look at futures open interest. This is the total value of all the contracts in all futures. This is the chart that represents the line at the bottom here on our Coinalyze analysis. The reason I wanted to show this was just to get an idea of where it's been the last few days. So here is where we were prior to the liquidation. Interest super high, basically all-time highs in futures open interest, about 400,000 total Bitcoin. Then we get the liquidation down, and for the last few days, open interest is just sideways. Not really seeing an influx of new traders opening new positions. Either the market as a whole is completely vaporized from this event and exhausted, or maybe a few of these traders learned their lesson and have decided to wait a bit. Maybe this doesn't look like a great risk-reward entry for them. Whatever the reason, open interest is horizontal the last few days, and we haven't seen really a lot of movement here. And so while open interest is staying low like this, low compared to where it's been this year, I'm not even going to show you the funding rate. We're not going to look at it, because when open interest is this low, the funding rate really doesn't matter. I'm more concerned about it when the value of the contracts begins to grow and we can see more interest returning to the space. That's a general rule I have. I don't like to keep hard rules about when I look at certain data. Just for now, we're not going to do a full futures review. Just know that open interest has stayed horizontal. The funding rate is about, neutral territory, and there just isn't a lot to see there right now. But what we're looking for as a byproduct of the liquidation, and then to get an idea of where we think the market will head, is looking for spending behavior. What are the various cohorts doing on chain? Have they been rattled by the events of the last few days? Are they starting to behave any differently? In my previous video, we talked about how it looked like holders were completely unaffected, totally unfazed by the liquidation event. So we want to see, is that still true? Is that trend continuing to hold up? Let's verify. Here is our tried and true spent volume age bands. This is the volume of all spent coin each day on chain, broken up by their ages. And right now we're only looking at spent coins that are at least 3 months old. This activity remains muted and sideways. So we have seen that this volume got the spike after the original all-time high break at the end of October. And between these two all-time high taps, we had an increase of older coin volume. These are hodlers taking profits. Some of them have coins from back here, finally realizing some gains, and others are from earlier, from the previous rally. But the volume itself was controlled and on the lighter end, and it's been declining since the late October moment. Older hodlers just aren't spending their coins in volume here. And I'll show you some other charts that help to corroborate this view so that we aren't just looking at a single data point. Here is our PnL and coin destruction dashboard. I like this one a lot, particularly where the market is now, because it's showing us a lot of the behaviors. We've got our loss realization a few days ago. We can see here realized profit still trending down and realized loss still trending up. And we stated before the reason that that was important is because we have a lot of holders that are sitting in large profit right now and they are not realizing it. Realized profit is declining as price sits essentially at 50,000. So we've got no one realizing profit really, and the people who are in loss, which are top buyers, they can literally only be the top buyers. Those folks are realizing losses. So this is a healthy market churn that we are experiencing right now. Any sell pressure is coming from short-term holders. If you look at this purple chart down here at the bottom, this is the spent profit ratio of short-term holders. Short-term holders are folks that have bought their coins in the last few months, and they represent the cohort of supply that are most affected by recent price action. They're the first ones tested by a pullback, and they often are the lowest confidence holders. They tend to relinquish their coins the quickest because they've had the least amount of time in the market. So it makes sense that they would be the least loyal to the asset. A few of those short-term holders may hold on to their coins, stick out the volatility, and eventually mature into being long-term holders. But many of them are realizing losses right now. If we look down at their profitability, like I was starting to say, we got this dip down here recently. Let me zoom in just a tiny bit more. This fall in the profitability of their spent coins, and remember, this is only spent coins. There are some short-term held coins that are not moving, and those are not represented here. So you're only seeing spenders. And the dip that we saw here, this dip in profitability below the break-even line, is the lowest profitability print that this group has had since July, since late July at the bottom of the summer lows. So in effect, we're seeing a full capitulation by short-term holders. They are utterly collapsing in the face of weakness. And while that seems a bit alarming, the language I'm using might seem concerning. In fact, I view it as a very healthy dynamic in markets. These things need to happen. Understand that when price creates new highs, regardless of the climate of the market, regardless of how much retail euphoria there may or may not be, there are always investors who buy the top, who buy the all-time high breakout. And many of those investors tend to be the very first ones to give up when price shows weakness after the breakout. Oftentimes, you create new highs and then price pulls back, right? And it tests a previous low area. That's a natural oscillation. And in those moments, frequently, new buyers get out, right? Well, what we've had, we created 2 new all-time highs in a period of a couple of weeks. And since that moment, it's been pretty much downhill. If you are a new investor, if you're someone who just bought into Bitcoin in late October of 2021, all you have seen is red, volatile downside action. And so if you bought up here, November 4th, November 7th, you're 20% underwater right now. And so we've got a lot of these people capitulating and selling their coins at a loss at a lower profitability than they have seen since the summer when price was in the 30Ks. And so for their profitability to be that low when price is at 50,000 means that all of these people bought up here and they are now in considerable loss. The profitability of long-term holders, which is just to the right of it here in blue, if you look at it, it's pretty much sideways. They got a bit of a rise during the rally, but this range is just hanging out here. They're hanging out right around 2 and 3x profitability. So this group is not the one creating sell pressure. We're not really seeing big changes in the value here. It's low activity. Most of it is coming from short-term holders capitulating. And as a total group, as a total market, profitable spending is now dipped below the break-even line. I'll zoom in a little bit. See this little test under here? We get these little tests from time to time. And so what I'm looking for now is to see if this capitulation from these short-term holders who are realizing loss, while long-term holders are not realizing profits. I'm waiting to see if this capitulative moment allows us to clear the room of the bears so that the price can continue to move forward. Because what's really been propping up Bitcoin's price for the last couple of months is not an intense buy pressure. It's the fact that we've had little to no substantial selling. The vast majority of various cohorts on chain are very stoic and steadfast in their behavior, and they're not showing signs of weakness. That's really what is helping price to continue to grow. This has been a very odd year for Bitcoin. We're not getting a typical bull run after a major correction, and we may not. We would need to see a dramatic increase in on-chain activity. to expect the kind of rally that we saw to begin this year. And I think that the only conditions that will allow for that kind of market first require that we shed some of this dumb money, because they bought in a low demand environment and they are now seeing weakness. So these people need to be shaken out, in my opinion, in order for the market to be cleared of weak hands and doubters. And then price can continue to appreciate and be slowly accumulated by the various hodler cohorts. Scroll down here a little bit. I wanted to show you an interesting dynamic. So I tweeted about this, but it's something that I think is worth talking about. So these two charts are showing the percent of entities in profit and the percent of supply in profit. So the supply is just counting the total amount of Bitcoin and whether or not the last time that they moved is a price above or below the current price. That's how you determine if it's in profit. Entities in profit uses our clustering algorithms at Glassnode to identify individual participants on chain and the various addresses that they own to determine whether a person is in profit or not, or an institution, whatever individual that may be on chain. It could be El Salvador. Are they in profit or not? They probably are, because Bukele's been buying the dip aggressively. That's what this entities in profit is showing. And the thing to observe here is both of these charts are showing the same trend. So we'll talk about it on the entities in profit chart. We got a rise in the amount of entities in profit as price rose out of July and August. Got up into the highs in September. Entities in profit got up to about 90%. In the weakness of price, we got a pullback in the amount of entities in profit. That makes sense, right? About 10% of them fell out of profit from the highs on September 6th to the lows at the end of September, right? We went from 90% to 80%. In the rally in October, all the way up into new all-time highs, we went from 80% of the supply in profit, of entities in profit, up to almost 100%. At this moment, essentially every person on chain is in the green. Now, there is someone intraday who buys a coin and price pulls back and they're not in profit. They might be slightly in the red. So that's why you don't get 100%. You get 99.339% entities in profit. But regardless, essentially everyone's in the green. Well, we've now pulled back and we've seen entities in profit and supply in profit falling. And they've fallen back down to 80%, even though price is still at 50K, not where it was at the beginning of October at a 41K, right? There's a big disparity in price, but the amount of people in profit is now the same as it was 2.5 months ago. Why is that? Because a bunch of people bought the top. This is showing that we had a ton of supply change hands up here. Maybe not as much as in a typical bull run, but a bunch of supply compared to back here changed hands at the top. And when we got just a slight pullback, not even back to 40K, just to 50K, we lost 20% of entities on chain out of the money. They fell from 100% to 80% of participants on chain in the money. For this to have risen all the way to 100 and then pulled all the way back down to 80, when price is 10K higher than it was 2 months ago, really demonstrates how much supply changed hands up here at these high values. There were a lot of people that bought the top, that bought the all-time high breakout, expecting something to happen, and they were denied. And they're now finding 4 out of 5 of them are in the money now instead of 100%. So I think this is a really interesting dynamic, and it helps to explain just how much supply changed hands up here that we are now seeing capitulate out of short-term holder hands. They're spending them to some new buyers, some other new short-term holder, or perhaps it's a hodler accumulating supply from a weak investor. Either way, many of these top buyers here are now relinquishing their coins into loss. They're realizing loss, and the amount of entities in profit is pulled back to where it was 2 months ago. This seems like a healthy reset, and it also gives me the sense that we're at a place in the market right now where we may need to build some support. We may need to continue ranging sideways and let the amount of entities in profit stabilize, because if we start creating more and more people in loss, then we're going to catalyze more folks into action, and that may create market behaviors that we're not looking for, that we're not hoping to see. So I'd like to see price hold up, continue to hang out in this sideways range in the low 50s, high 40s. And then maybe in January, early Q1, when balance sheets are cleared and PnLs are settled, maybe we can start to see capital flowing a little more freely into Bitcoin. But right now, we're not seeing a lot of activity. We're primarily seeing short-term hands dumping their coins. I do want to briefly touch on some network activity trends that I'm seeing. We've been looking at the activity on chain rising since the summer, but something that we've noted a few times on this channel, though not recently, is that the amount of active addresses and active entities on chain each day, and even their transactions, these three charts on the top, are all still at relatively low and muted levels compared to where the last proper bull run levels were, right? If you look back here at the end of last year, about a calendar year ago, the amount of activity on chain each day was extremely elevated. We had a lot of active addresses, we had a lot of active entities participating with these addresses, and a lot of transactions taking place on chain. All of these levels have pulled back and are still quite low despite rising recently. But there are some positive developments here. Active addresses just recently created a high, the highest level it's been since May. That's great. Love to see that. And it also looks like active entities and transactions, I'll zoom into both of them here, got a bump in the beginning of October when we got that really strong rally that caught so many people unawares. We got the strong price action, and we also got a jump in active entities, a jump in addresses, a jump in transactions. And all of these activity levels are now hanging out at this higher baseline. Look at the transactions in particular. We got a jump up in transactions, and then we're hanging out at this new elevated level of activity up here at the highs. We're no longer down in this kind of lower 175,000, 200,000 transactions level. We're up here at 225,000 now, and it's sideways. Could this mean that activity is returning to the network, that we're seeing slowly interest picking back up? It's possible. There's a likelihood that after watching Bitcoin experience the liquidation event it just went through, if we continue to chop sideways, folks might see this as a sign of strength. There's a lot of investors that are expecting Bitcoin to collapse and fall into the ground and to see, 10K, 15K prices. I don't think that that's very realistic right now. That's not what I think is going to happen, but there are bears out there. There are a lot of doubters. And seeing Bitcoin hold up after the events of the past week in conjunction with this elevated activity, this sustained elevated activity, we may start to see folks coming back into Bitcoin. I still don't think it'll happen in December. I don't think there's a lot of reasons to drive people to invest right now. But I'm encouraged by seeing the rise in activity, the sustained rise in activity. It's not just a blip. The number of addresses with a non-zero balance has continued to make a new all-time high and stay elevated, which is great. We watched for months to see this breakout again. So we're getting some positive activity on chain in conjunction with the low spending by older hands, the predominant short-term holder spending, which you can see here on the spent volume age bands, not showing a spike of older coin spending at all. It's in fact horizontal, and it's below 2% of daily volume on chain. Very low. I want to show you guys a couple other charts that we don't normally look at because I think it's fun to show you cool things and they help tell a bit of this story. So what we're looking at right now is coin dormancy. Dormancy represents the average age of spent coins each day per unit of BTC. So it's volume weighted. Higher values mean large volumes of older coins being spent. And as we saw on the spent volume age bands, we saw a decline in older coin spending. We're seeing a decline in dormancy. And interestingly, dormancy as a metric is now at the 50% median line for the lifetime history of Bitcoin. Let me back out here so you can see what I'm talking about. Here is the lifetime history of Bitcoin and dormancy. And the dormancy value now, after being elevated for most of the year up here at these high levels, dormancy is now back down here in the 20s, which represents the 50% line, which means that half of Bitcoin's life has experienced a lower dormancy value than this. And if you look back, many of these low dormancy values were in bearish periods for the market. The last time we tested these levels was in the bear market of 2018. And there is a bit of a continual rise in dormancy as the age of the network grows and the possibility for coins to have a variety of older ages grows, right? Back here in 2015, there weren't any 10-year-old coins that could be spent. So the maximum ceiling of dormancy was different than it is now. So you do get a general rise in this value, but more importantly, the trend is what's important. And we're seeing a decline all the way back down to these lower baseline values, which really represent represent more of a bearish behavior. Even in the bull markets of old, dormancy values would get well above this 50% line. They'd get well up in here into these high values that we still see today. And yet dormancy is all the way down here, which represents a lack of activity from older coins. They're just simply not interested, despite the fact that we have created new highs and price has been holding up above 50K now for a couple of months. That is impressive to me, and that helps to bolster my bull thesis about Bitcoin generally. Here is a look at dormancy mixed with price. So if you follow me on Twitter, you might have seen this chart tweeted the other day, but I think that it's cool and I wanted to talk about it on the video today. So what we're looking at here is a combination of a couple of different data points. We've got the price chart in the background, and it's colored and sized by two different factors. The thickness of the line represents profit taking. So the thicker the line, the more profitable the coins are that are being spent. The color of the line represents the age. That's the dormancy value that we were just speaking about. So high values create red colors, and that means older coins. Lower values mean younger coins, and those are in green. Here's the rally last year. Thick line, red colors. That means high profit, old coins, right? In large volumes as well. That's what we got in this rally. A little more distribution up here at these high values by some of these coins. And then it starts to get green. You notice the lines getting more green as we're moving on. That's because older coins are not spending into this. They had their moment, and it was back here. As the March rally turned into April and we started to see weakness, the age of coins got younger and younger. So we get the line getting darker and darker green, and also their profit level is lowering. And so the line is getting thinner and thinner. And if you look down here in the summer, it is dark green and pencil thin, which means these are extremely young coins with an extremely low level of profit, probably in loss. If I look at the range of spent profits for this chart over here, some of them are under 1.0, which means they were spent in loss. And my guess is that those are right here by how thin this line is. In July, you see this little red pop? This is a spend of old coins, older coins, coins that have maybe about 120 to 140 days accrued to them. So they're 3 or 4 months old at this point. They got spent here at the July low. The line is a little thicker than it was back here, so there's slightly more profit. But these coins came from back here somewhere. Someone capitulated in July, and this helped to catalyze the rally. Note how the line turns back to green, which means younger coins, and it thickens up, which shows profit. What we've seen in the last couple of months is a dramatic reduction in coin age and profit taking. So the line is a little thicker. We got some profit taking here in these new highs. That's expected. But what's going on in the last couple of weeks is this line is getting more and more green. It's very dark green, just like it is here at the lows in September. So we've got a lot of young coins moving with low profit values as a total network. And that kind of behavior is pretty remarkable to me. We're creating all-time highs. We're creating breakouts. We're not seeing red like we were earlier this year. In fact, it's staying very dark green, which is showing that the majority of activity stays with these younger coins. It's the same supply, churning hands over and over again between different traders. That's really the only explanation for it. How can the supply, the active supply, remain so young from day to day, week to week? And it's because it continues to get churned around. And the accumulators, the long-term holders and the illiquid types, they're just adding to their stacks slowly and steadily. I can show you that. Here's the 14-day change of illiquid supply. Illiquid supply represents the hodlers. Folks who have a low amount of outflows. They predominantly accumulate Bitcoin and they sell very little to none of it. Those are the illiquid types. And this chart here is showing the growth of illiquid supply on a 14-day rolling basis. And just look over here. Look at all the growth. Orange is growth. Blue are outflows by illiquid supply. They had some outflows in the spring. They helped to catalyze the sell-off. And there was a little bit of selling here out of the July bottom, a bit of distribution. But mostly, this group has been diamond-encrusted hands all year. And just look at the accumulation by this group recently. They even bought the top. These strong hands bought corn up here. They're absorbing supply into price weakness. So this behavior is going on while we are seeing a decline in dormancy. They're telling you a story of accumulation on chain. Old coins aren't moving. If they're not moving, the most likely outcome is that they are accumulating and buying. So let's try to bring all of this together. I've been bouncing around a bunch. Illiquid supply is continuing to grow. Strong hands are accumulating supply. None of that has changed. Dormancy is declining, which means that the volume of older coins moving on chain each day is very low. And we've seen that it's extremely young coins with low levels of profit being moved recently. The amount of entities that are in profit now is the same that it was at the end of September, despite creating new highs. And we spoke about how that demonstrates a lot of coin changed hands at the top and now finds itself in loss. And those holders are the ones we are seeing spend their coins right now. They are spending in a loss as short-term holders, representing some of their lowest profitability since July. And we're seeing that manifest in realized losses up here in the top right, but we're not seeing realized profit. And that is the lack of older coin volume that I have been hammering in throughout this video. It simply isn't there. Meanwhile, the futures market has stayed horizontal and quiet. There has not been an influx in new contracts. And we expect, based on the history of this year, that it's most likely price will go sideways and test the liquidation low of this recent event, just as it has throughout this year. That seems the most probabilistic outcome over the next few weeks. If I see a sudden burst in older coin spending, or any of these dynamics suddenly print a different trend, we'll be sure to talk about it and unpack it as much as possible. But right now, the market is holding up very well, and I suspect that we have seen the worst of the drama, at least for the short term. There could be some macro black swan headwinds that I can't predict. If there is some global uncertainty with the economy, with rates, with something that the Fed does, it could have an immediate impact on Bitcoin and crypto at large. But they're things to consider, things to keep in the back of our minds. And more importantly, the people who hold Bitcoin, the actual day-to-day physical human beings that own spot Bitcoin, they seem completely unaffected by this drama over here. And I think that they're starting to learn. After everything we've been through this year, I believe the holder class is more sophisticated and more mature now than they've been in the past. And I simply do not expect them to dump at the first sign of trouble. Make sure you follow me on Twitter at TXMCTrades. I post a lot of charts and analysis on there. I try to bring as many of them into the videos as possible, but they don't all fit. So you'll see a lot of cool content if you follow me there. I also join podcasts, I go on Twitter Spaces, and I do a lot of things. You find out about all that stuff if you join me on Twitter. If you have any comments or questions about the things we talked about today, if you think there are any details I overlooked, leave them in the comments. I'll be sure to read them as I always do and get back to you. The last couple of videos we've made on this channel have really exploded in viewership. I've been so humbled and I'm so grateful that I've received such a positive response from you guys. It's clear that we are learning things together and that you find value in what we talk about. And I really appreciate all of your support. It's also becoming really difficult to manually reply to every comment that's left on my videos. So please know that I am reading all of them. I try to reply to as many of them as humanly possible. But as the channel grows and I get more and more comments, it's harder to leave a personalized response on all of them. So I just wanted to make a comment about that and let you know that I am still reading them. I do still react to them and I will answer your questions, but I might not always get to reply to each person. I will be traveling this weekend, so I will not be able to make a video until Monday or Tuesday, but I will be watching the markets and I'll be tweeting about anything I see while I'm traveling. We'll check back in together on Monday or Tuesday and see how the market's been playing out, but I'm really trying to give it a bit of space. I want to talk with you guys frequently, but I also don't want to get too zoomed in on the data and misinterpret noise for signal. So I need to give the market time to settle out. We need to see our hypothesis play through. And if there's any red flags that develop, well, we'll hit the drawing board and we'll see how it affects our thesis. But that's it. I'll stop there. I feel like I've been rambling a bit. I hope you found value in today's video. And if you do, make sure to share it with your friends and family who are curious to learn more about Bitcoin. Until we speak again, take care of yourselves. Have a wonderful weekend. We'll chat at the beginning of next week. Cheers, friends.